Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim the Currency Professor, and today is Friday, August 16th, 2013, midway through the month of August 2013. Economically this week we had some good news and we had some bad news. Good news was pretty much all out of Europe, where GDP was better than expected, ending the recession there officially. The numbers weren't great, up 0.3%, but at least it was positive. In the U.S., pretty much all the news was more or less negative, and the dollar finally selling off on Thursday because of that negativity. On Friday today, we had out current account out of Europe and the trade balance out of Europe. Both were a little bit less than expectations, nothing to really seriously worry about. But it was a little bit less than expectations. Numbers out of Canada, manufacturing sales and foreign security purchases, both down quite a bit, and quite a bit more than expectations, and negative numbers. So that is kind of concerning. A lot of negative numbers coming out of Canada lately. In the U.S., building permits and housing starts, a little bit less than expectations. Building permits 0.94, expectations were 0.95, but we were still up over last month's 0.92. And housing starts, same kind of scenario, a little bit less than expectations. 0.90 was the actual, 0.91 was expectations, 0.85 though was last month. So quite a bit better. Now the big news on the front here was the University of Michigan consumer sentiment number, which came out at 80 even. That is down below expectations and last month. However, this is the preliminary number, so there will be a revision to that in 2 weeks. So we'll see if they actually revise that up or not. Next week is fairly quiet. We won't really see any real economic numbers until midweek on Wednesday. In the U.S., we'll have existing home sales. 515 million is expected. 508 was last month. And then also the FOMC meeting minutes from the last meeting will be released. And that can always push markets. So kind of watching that closely. On Thursday is PMI day. We'll start with China and run all the way through Europe and then into the U.S. None of them are really expected to show any big changes. Out of Germany, both the manufacturing and the services above 51 are expectations, and also in Europe, both manufacturing and services above 50. So that could be a positive sign for Europe. In the U.S., expectations are for a little bit higher number as well. Then on Thursday, Friday, and Saturday, we have the Jackson Hole Symposium that the Federal Reserve puts on. Now, apparently, Ben Bernanke will not be attending. He made that very clear several months ago. So anything that goes on there will be done without him. And then on Friday we have GDP, final GDP for Germany, and a second estimate for the UK. Neither one are expected to show any big changes at all. So overall pretty quiet. And then on Friday also new home sales out of the US expected to be 492 versus last month's 497, so a little bit lower again. This is kind of summer season though in the US, so the numbers usually do go down July and August a little bit, or just fall off a little bit. A lot of vacations and everything, so really not going to put a whole lot of stock into 1 or 2 months numbers in the middle of summer. So we'll see how September and October's numbers come out in October and November. Alright, moving on to the technicals here. We've had a very volatile week, a lot of up and down, and we're pretty much ending where we started or very close to it on a lot of the pairs. The Euro-US dollar down today 15 pips. We were up quite a bit yesterday, and you can kind of see here we're kind of forming what could be a double top if we start to fall off again. Now, yesterday's big move really didn't do much except reverse the last 3 closes, which is a good thing. But if we can't follow through today and close higher today, then we're probably in a little bit of trouble here, and we could sell off. On a weekly basis, we've been up now 2, 4, 6, just about 8 weeks in a row, or 6 weeks in a row, I'm sorry. So really looking for us to probably pull back a little bit, at least a couple of weeks. And on the monthlies, still in the same range here. Got a little bit of an upward bias to this move, but not a lot of conviction, so really looking like it's probably going to turn around here soon. Pound dollar up quite a bit the last 2 days, and today kind of flat, down about 5 pips right now, but we made quite a bit of a move here this week, and we're back up above 156. And if we go onto the weeklies here, we can see a little bit better that we've been up now just about 5 out of the last 6 weeks, and we're really pushing towards the upper end of this range here. We could run all the way up here to this trend line, which is around 158.75, but that would probably be about it, and we probably would do it on an intra-week basis. And on the monthlies, we can see here how we're really just bouncing around. Last 6 months, same range here, really going nowhere. We are below this trend line, so that's still a negative here. And if we do not get back above that trend line soon and really start pushing up around the 165, 170 mark, then we're going to fall off here, and we're probably going to get down to those 140s that we've been looking for, the lower 140s. US dollar against the Swiss franc, up now just slightly, up about 2 pips depending on your quote service. We are almost right back where we started the week. We had a very nice beginning of the week and then sold off very dramatically yesterday, but it looks like this low down in here should hold. This is the same area as we've had kind of back here, with this being the lower point, so looks like we're making a pretty good base here, and yesterday and today's action tested these lows, so probably from here we could see our movement going up into next week. And if we look on the weeklies, we can see how this week ending up is still a positive week, but just barely, and you can see how we spiked up during the middle of the week and then came right back down. So looks like we're building a little bit of a base here from which to move higher. And on the monthlies, well, so far we are just very, very barely positive for the month. We need to close up above these trend lines, which right now the higher one, which goes back about 35 years, almost 40 years, is right now at 100 even. So we would need to close 101, 102 area on a monthly basis, and then that would really turn this thing around longer term. So that's what we're looking for. US dollar against Japanese yen, up just slightly, up about 28 pips right now. Very volatile week, up quite a bit at the beginning of the week, then Wednesday and Thursday down, and right now we're just bopping up a little bit here, but it looks like we got some lows in here. Looks like this should hold in this area. We're coming down now, we're testing it, so next week we should run up, and if we can close up above this upper trend line, that would be very positive, because then we would be off to some new highs. And if we look here on the weeklies, we can see how that would take us up then to this upper trend line, which is around just under 100. So if we could close next week up around there, that would be very, very positive. If we closed above it, of course, that would be extremely positive and run us up to some new highs. And on the monthlies, we're still barely negative for the month, but nonetheless, we're still hanging in there. This is really a nice little correction that we're having on the monthlies. So it's just a decent little consolidation pullback, and really is very healthy for the market. Euro Swiss down a little bit today, down about 11 ticks. We were up quite a bit at the beginning of the week, and now the last couple of days we're down, almost giving back what we gained. But overall, still looks very positive. We keep marching up and coming down, but not quite as far down as before, and then marching up again. So longer term, it still looks very, very good here. And once we get up past that 125.50, we get a close up above that, then this market will really take off. Euro yen, really stuck in a range for the week, a very narrow range for the week. Right now we're up 22 on the day-to-day, but we've been in the same range for the last 3-4 days now. We did have a nice little run up at the beginning of the week, and then we just kind of stalled. So we're stuck, though. We're definitely stuck in this kind of a range here for the last few months. So at some point we're going to get up to the top here, and then we're going to break out and move up. And we're still looking for us to move up to this 137, 138 area. We are slightly below this trend line here, but it's not really a concern at this point. It would be nice, of course, if we did close up above that trend line this week. We're obviously not going to do that. But there's always next week too, and we're not that far below it. We're within the range here of what we've seen, and realistically we can say that this was some lows here, then lows here, and then we got a low here. So once we break this neckline up here around 133, then we could really see a run higher very quickly, and we can see it a little better here on the monthlies. It actually looks like we could pull back for a couple of months or so, maybe get down to 125, 124 area even, and then move up. But we could sit here in this range also for a month or two more, and then move up. But all in all, still looks very good for us to run up. Right now, technically, we could run up in one day 300-400 pips, or we could go down that much. So the risk is very, very high. But longer term, it still looks like we're going to head up to that 137, 138 level. U.S. dollar against the Canadian. A lot of up and down motion this week, and pretty much going nowhere. Right now we're up 35 pips, 103.40 area, and we're really kind of building a pretty decent base here. We came down, hit this trend line down in here, settled and went up. Then we've come down here now, we've tested it, and we're building another base right here, and we're building it with a little bit more of an upward bias. So actually this looks very, very good for us to run up from here. If we jump out to the weeklies, of course, we got that nice curvature going, real nice building of momentum going here. So it looks very, very good. And same thing on the monthlies, looks very strong here as we start to really gain that momentum and start to move up. So really looking forward to do that probably in the next month or two. We could have a point at which all of a sudden we just run up, get up to around 109, 110, maybe even a little higher, and then we could see a little bit of a pullback and then another thrust up. U.S. dollar against the Australian, or Australian against the U.S., however you want to look at it, up about 40 pips right now, 91.80 area, and we've had a nice correction this week. Let's jump off here. We've had a nice correction this week, consolidating down a little bit and then up towards the end of the week, and pretty much going nowhere for the whole week. But we are forming what could be this nice little V or U-shaped pattern here. So what happened was we had this nice consolidation back here, a V pattern right down and through here, and then another consolidation on the other side if we do indeed do that. So we could bounce around between 93 and 91 for a couple of weeks, and then maybe move up out of this, because that would build a very, very strong base in which to move up. Technically though, on the weeklies and the monthlies, we look actually quite weak still. So here we are, we're having a correction on the weeklies, coming right back almost as much as we lost last week, or the previous week, and this week now just bopping up a little bit. So it looks like we're kind of running out of steam a little bit. And on the monthlies, well, we are exceeding last month, but not by much. And of course we still have 2 weeks left in the month, so a lot can happen in that time frame. That is it for today. Questions, comments, please feel free to give me a shout in the email, tim@fxaddicts.com, or feel free to stop by FX Addicts. If you're not a member, please sign up. We do offer a 7-day free trial, and if you have questions, like I say, you can always contact me either by phone or by email or by Skype. So I am available most of the time. Thank you very much.